Hey y'all, welcome to another video. Got an update today, exciting day. Today's Thursday the 25th of February. And what's important is tomorrow is Friday. When markets are selling off like they are right now, Fridays are usually not good. There's a saying that goes, markets don't bottom on Fridays. And that's because anybody who wants to sell won't want to be long on a Friday going into the weekend. So let's look at the charts and today's action. Today's action shows, first one here is Apple. Apple's down 3.5%. More importantly than that is that it's below both of these moving averages. I have a 20 and a 65-day moving average. So the average price is above. So this is weakness by far, definitely weakness. Apple has recovered from here before. If you look back in September of last year and then November of last year, it did get below both moving averages, especially that 65-day moving average. But here what we have in the RSI, we show more weakness than in those periods, plus we're at a higher point. The key to a decline, to show that it's a real decline, and not just a dip, will be if it takes out these support levels. The nearest support level is around 113. If it's going to be a dip, buyers need to step in now. If it's going to be a sell-off of more than a correction, it's already down 16%. So if it's going to be a correction and then a bear market, it needs to take out some support, which is at 113 level. Otherwise, it's just making a support for dip buying. We're going to have to wait and see what it's doing. I do believe it closed on the lows, and nobody wanted to buy this with conviction. So I do think it's bad action. So if I wanted to start a position, I would wait. I would wait to see it get above its moving averages. If you look at the hourly, it's not above any moving average, so the odds would favor waiting. It's better to be late than to be early and wrong, especially in this situation. If you look at the weekly, same moving averages, the 20 and the 65. We haven't had a breach of that 20 period moving average before, and we are reaching it now. And the next support is still at 113. The next moving average is at 98. So in the last correction, actually the last bear market was in 2020 in the health crisis sell-off. It did reach the 65-week moving average. So if that were to happen now, the next support from that moving average and after the previous lows would be around 98. So do be aware, do be careful. If I did not have a position, I would wait, and then it's going to take a while to find support anyway. I would start putting on a new position once it holds for a while, and then probably the moving averages will come down, and then once we start breaking above those moving averages, that would be a good time to get back in. And the way I would do it, I would put a buy stop. I would have a buy stop at some place for an initial position. I don't want to catch these lows because you're just gambling at that point. I'm going to jump over to Tesla. Tesla's in the same boat. If you look, most of these stocks are going to be in a similar situation. We're at the moving averages and below the moving averages. We need to hold. Tesla was or is below 700. So if you look, Tesla did drop 8% today. It should already be in bear market territory, and it is 23%. So the next level of support, you might say, is somewhere between that old dip at 617 and around 570. So those levels are, if I was still in it, I would use buy stops. I would be very careful because it could sell off kind of wildly. If I want to get in, I won't get in until it starts to show strength and head back toward the highs. I want to avoid the risk. If the RSI is weak and we already lost that 50 period moving average, that 50 period moving average is going to be our support until it isn't. Last time it did serve as support when we were in the 400s and all along, and we are breaking that now, which is not a good sign. My concern is that it wants to break through that support, that very weak support in the 600s, and then we'll head towards the 500 to 400 range to test to see if we hold there. So I would want to avoid it to be a buyer. I want to see it get above 750 with strength, 780 with strength, and then it can regain the uptrend. And then Tesla, Arkk, and Bitcoin are now kind of all linked together. Arkk, the innovation ETF, also had a bad day, 6.37%. It's below its 65-day moving average and heading very close to its near support, which is a bad sign. Not quite 20% down, so this is still a correction. But if it gets into that 20%, they'll start calling it a bear market. Anything else? Nope, it's pretty clear. It needs to hold that 65 period moving average to show that trend is still intact. It can sell off and then regain, but as far as these trend lines, they kind of help guide and measure the trend. If I would want to be bullish above the trend lines, and I would be cautious below the trend lines. That's the way you want to use them. Oh, let me go at the weekly. I didn't cover that. Yeah, see, this is the look. Arkk did take off from that old support at 39 to 160, so that's a quadruple. 30% retracement or a 50% retracement would actually be very healthy. So I would be cautious in something like this, and I would not take more risk than I would want to take. I don't want to risk money I can't afford to lose. The Bitcoin's actually doing well for itself. It's still above the 20 and 65-day moving averages, but it's probably going to see some pressure because of the action. You can already see a red day, didn't get above. The market is weak. Bitcoin right now is showing it's down almost 3%. The near support is going to be the right around 45,000. If it breaks through that, the old high around 40,000 will be support, and then the 65 period moving average around 38,000. I do think it will sell off, or at least try. So if I didn't already take profits, I would be cautious. I would reduce my size, and I would be concerned of a correction. There's a divergence right there in the bottom. The momentum is shifting, and it would be quite normal to at least test the moving averages and see if we can't go lower. A lot of people are in this kind of stuff, and it's going to be stressful for newer investors, and they're going to panic. They're going to start pushing, unloading the positions if they have leverage or margin. The brokers will force them out, and that's most likely what's going to happen if we see continued selling. Bitcoin on the weekly went from below the moving average, under 10, to almost 60,000. So 30% retracement to 50% retracement, completely normal. Still bullish. Support. The next support is going to be around on a weekly is going to be the highs, and then something around the old 30,000, and then even as much as 20,000, which is a normal retracement after such a run up. So profit taking is perfectly healthy. If I was trying to get back in, I would wait to see it take out the highs around 60,000. That's the only way I would get back into this. The other spot is if it takes out that candle around 52,000. If you see strength above there, that would be reassuring. That would be confirming strength. But until then, I would be very cautious. Jumping over to the VIX volatility. Volatility had a huge spike today. Here's the hourly chart on the highs. What that means is people are buying options for protection. For the type of moves we're having, like that was a dip, 130 on Apple, and now we're at 120. The VIX is not as high, so the fear really isn't exploding, which is surprising. So there could be a lot of bulls. If you look at the percentage of stocks that are above the 200-day moving average, we're still at 85%, and the trend is still intact. It's going to be tested, I think. Last time in the health crisis, it went as low as around 5 or 6% above that means 6% of stocks were bullish above their 200-day moving average. Before that, it was around 60 to 66%, and we are way above that. So there's a lot of bullish action, which will be reduced. That's what the MMTH is telling us. And then the other thing to watch out for is the bonds are they're in a very dangerous spot. The treasuries are being sold off pretty hard. Mortgage-backed MBS is selling off pretty hard, which is concerning. Junk bonds, they're getting sold off. When you see all of these sensitive assets being sold off, it can be a bad sign and confirms what's going on in the market. Home builders still above the 65 period. Russell still above the 65 period. So it's really these growth stocks that are bringing the whole market, bringing doubts to the whole market. So I would be trimming positions. I would be putting stop losses if I didn't already have them. I don't want to have too much risk because I am concerned that I will finally have a sell-off after such a big run. If you look at cubes, 175 to as high as 340, it's almost a 100% move. So be very careful out there, and don't risk money you can't afford to lose. Cheers.